And I'm sure that there are a lot of parents here who send their kids overseas to study, right? To America, to UK, to Australia to study. What should they do to hedge themselves? Should they buy into the currencies now, or what should they do? What's your outlook on these currencies?
I think that's a very good question, because I'm also trying to save money for children's education. We always believe to diversify when it comes to investment, because you never know where the currencies would be. And I mean, when I was studying in Australia, that was when Asian financial crisis happened. And I was in Australia and the currency moved very violently, and it affected some of my friends who had to come back home because the currency has been so expensive, and in UK as well. And now a lot of people are drawing, is this going to be the same type of crisis that we are looking at? And how about all this currency outlook? Over the long term, if you're looking at Australian dollar, let me start with Australia. Australia has gone through a lot in the last few years. They had a very huge mining boom until 2012. And since then, the mining boom has actually stopped because they are going into the production phase. And the Aussie dollar during those period has gone up in terms of, against US dollar, has gone up to 1.1 against the US dollar. And since then, it has fallen all the way back down to 70 cents to the dollar. So the Aussie dollar is very volatile and is a high beta currency, I would say. And it's highly correlated to China, because China now is the largest trading partner of Australia. And they also export about 30% of the commodity to the Asian region. So it's very much an Asian country. So in this cycle where we see a slowdown in China and commodity prices, as well as in Asian growth, Australia will not be spared. And that's why the RBA, the central bank, has been telling everyone that, we want a weaker Aussie dollar, right? Now, the challenge from a Malaysian perspective investor is that where would the Aussie dollar trade against the ringgit? Because both of these countries have very much similarities in terms of being a commodity currencies, being very much exposed to the China economy. So I think Aussie ringgit would tend to trade about 280 to 320 range over the medium term. But in the short term, it can be very volatile and very much driven by events.
Mm-hmm. And what about the pound?
The UK economy, well, I think besides the US, the UK has been another country that has been wanting to hike interest rates since the global financial crisis. To be fair, I think the UK economy has done relatively well. Just like the US, the job market has been picking up, and also the house prices has been rising in the UK. And UK is a global financial center. It attracts a lot of foreign money, being it into investments or into the property sector. So the economy is actually doing okay. But again, what is lacking in the UK is the wage growth, just like what we are seeing in a lot of the developed markets, that employees there are not able to get wage growth, although employment is doing okay. But overall, against emerging markets, I think the sterling will do better than emerging market currency. And hence, I think the sterling probably will go higher against the ringgit.